As Warren Buffett is one of the best investors in the world, it's always good to keep track on what he's doing with his investments. You may have seen some headlines lately that Warren Buffett has been buying some pharmaceutical companies. Now, this may at first glance seem like big news. However, this might not be the case. So in this video, I'm going to show you the latest updates to the Berkshire Hathaway portfolio from the latest 13F filing. And I will be including the brand new companies that he has been buying, the companies that he has increased his positions on, and also the companies that he's either closed or reduced his positions on. And as a little bonus at the end of this video, I've included an interview where Warren gives his perspective on the following three topics. When is the best time to buy a stock? His thoughts on the current economic climate, all to do with the pandemic, and then his thoughts on operating in a zero interest rate based economy. As always, if you do find anything in this video useful, be sure to drop a like. That would be much appreciated, as every like does help. Okay, sit back and relax, guys. Here are the latest updates to the Berkshire Hathaway portfolio. Okay, so here is what we've got coming up. We're first going to take a look at the brand new positions of Berkshire Hathaway. We'll take a look at the businesses that they increased their positions on, then take a look at the businesses they closed or reduced their positions on. I'll then show you the full Warren Buffett portfolio as it stands today, and then we'll finish with a little bonus interview with Warren as he answers three questions. When is the best time to buy a stock? His thoughts on the current environment working in the pandemic, and then also what he thinks about this negative interest rate environment. First up, let's take a look at these brand new positions. So this is what was taking all of the headlines, that he's bought a few different pharmaceutical companies. So on the left there, you can see the different companies, you can see what sector there was in, the value as it stands today. But what I want to draw your attention to is this. So this is the percentage of his total portfolio. So to me, all of these companies are actually less than 1%. So these are actually minor positions. We have to remember that the Berkshire Hathaway portfolio is 230 billion. So even though we are still working in the billions with these positions, they're still very small, which is why I think the current headlines that he's bought into pharmaceuticals is a little bit misleading. Take a look at Pfizer. So Pfizer at the bottom there is actually 0.06 of his portfolio. It barely makes a dent. Obviously, we know last quarter he also took part in the Snowflake IPO, and he's also introduced T-Mobile. So these are the new positions. Next up is the positions that he closed or reduced. So the first one is the only one he actually shut down, and this is Costco. Now this was a bit surprising because his business partner, Charlie Munger, loves Costco, yet the company closed their position. Now you can see the biggest story here is the big reduction in banks. A 95% reduction for JP Morgan Chase, 64% reduction for PNC, 46% reduction for Wells Fargo. The gold position was always a little bit strange. So he only ever took up a really small position in Barrick Gold anyway, but he's decided this quarter to reduce this by 40%. So now it's 0.15 of his portfolio. There are some other companies there, but they're just very small in his portfolio and minor reductions. And then second from bottom, we've got Apple. So Apple is his largest holding, and even reducing this by 3% is a lot of money. So probably just a bit of a rebalance there, as Apple has grown a lot over the last few months. And these are the positions that he already held, but he's increased his position on. So the first one is Kroger. You can see he's increased by 13%. Now, the biggest story on this page is Bank of America. So he'd reduced all the other banks. However, Check this out. This is already 10% of his portfolio, so this is a huge position. And this quarter, he increased it by almost 10%. So that is noteworthy. Interesting to see that he increased his General Motors by 7%, so this is now into the 1% of his portfolio. A small increase for Liberty Latin America. This is the Class C. So let's take a look at the full portfolio in its entirety. This is the Berkshire Hathaway portfolio, and it's made up of approximately 50 positions, and you can see there's quite a few major positions, but then anything less than 1% is the minor positions, and then lots of fractions of 1%. So I do prefer to look at this by stripping out anything that has less than 1%. So these are the major positions of Berkshire Hathaway. So now Apple makes up 48% of the portfolio. So almost half of this entire company is just Apple. A major position in Bank of America, 9% in Coca-Cola, 7% in American Express, 4% in Kraft Heinz. So pretty much these 5 companies are Berkshire Hathaway. Then smaller amounts, we have Moody's, we have US Bancorp, Charter Communications, DaVita Healthcare, Wells Fargo, VeriSign, Bank of New York Mellon, General Motors pops on there, and then all the other 40 positions make up the last 10%. But this is the Warren Buffett portfolio as it stands today. And as mentioned, let's finish with a bonus interview with Warren Buffett.
Warren, thank you for being here today. It's good to see you.
Thanks for having me.
I want to talk about the letter. Obviously, one of the things that you touch on in the letter is when people should be buying stocks. We're going to dig into a lot of it, but when you're looking at the futures down about 818 points this morning, I think probably the first thing viewers want to hear from you are your thoughts on what's happening with coronavirus, if this is a reason to panic, and if you are worried about this.
Well, I don't know I have any special thoughts beyond the news on the coronavirus. The very first day I bought stocks was March 12, 1942. And the stocks were down about 2% that day, as it turned out. Unfortunately, I bought in the morning, so when I came home in the evening, and my dad told me the execution price, it was down 2%. But if you're buying a business, and that's what stocks are, businesses. In fact, people will be better off if they say, I bought a business today, not a stock today, because that gives a different perspective on it. Then presumably, if you buy a farm, if you buy an apartment house, if you buy a business, you're going to own it for 10 or 20 or 30 years. And the real question is has the 10-year or 20-year outlook for American businesses changed in the last 24 hours or 48 hours? And you'll notice many of the businesses we own, partially own, American Express, we've owned it for 20 years, Coca-Cola, we've owned it for 40 years. Those are businesses. And you don't buy or sell your business based on today's headlines. And if it gives you a chance to buy something that you like and you can buy it even cheaper, then you're good luck, basically.
But people have a lot of questions about the economy. They're wondering what's happening right now, particularly with the coronavirus out there. You have a lot of economic data at your fingertips because not only are many businesses that Berkshire owns, but the businesses you own pieces in. What are you seeing right now around the globe?
Well, it affects various businesses. I would say that I receive commentary. I get some commentary monthly from almost all of the companies, and a good many of them had some comment about how it was affecting them and how it was affecting them. At that time, I'm sure it's accentuated. But they were affected by tariffs, they're affected by taxes, they're affected by, the most thing is they're affected by competitors and supply and demand over time. And I don't have the faintest idea what our businesses will be doing 6 months from now or 12 months from now. I do think that not only our businesses, but American business generally will be doing fabulously better 30 years from now or 20 years from now.
All right, let me ask you a broader question that comes in just on interest rates and the impact that might have as well. Please ask him what impact does the zero interest rate environment across places like Japan and Europe have on their banks, whether the business is still good, and does the prolonged low interest rate regime in the United States hurt the prospects of American banks like JP Morgan, et cetera?
Generally speaking, but there are a lot of other variables too, but the banks are going to make more money if there are higher rates with a steeper curve. The curve is more important. In other words, the 10-year versus short-term rates may make more difference in the absolute level. But around the world, if you look in the UK or Europe or Japan, even lower rates have made it pretty tough for banks. The returns on equity are not as high, and they have to use more leverage to even get the same returns, and I don't like that as well.
If you are talking about the curve that we're looking at this morning, the 5-year, 2-year is inverted. 2-year 10 is not right now, but the 10-year is below 1.4% this morning.
And think of it, the 10-year at 1.4%. That means you're paying 70 times earnings for something that can't increase its earnings for 10 years. Okay, now, somebody came to you with a stock and said, this is a terrific stock. It sells at 70 times earnings, and the earnings can't go up for 10 years. You'd say, well, explain that to me again.
Right.
But No, we've never seen a situation like this in the world, literally. I mean, you can go back and read Keynes, and you can read Adam Smith, and you can read, all the great ones, and they don't talk about negative interest rate. It never crossed their mind how it's supply and demand, all these marginal costs. But brilliant economists never really anticipated that you would have negative. You've got 13 trillion or something like that worldwide at negative interest rates, and we don't know what that means. I mean, we've got a lot of people who can speculate what it means, but 10 years from now or 15 years from now, we'll look back and say, well, it's obvious what would happen under that, and we'll see it. But it is not a normal situation, and and we don't know the answer. Central banks don't know the answer. All we know is that it's been useful in stimulating things, and particularly asset prices, now for 10 years. And what we thought was temporary in 2008 and 9 in the way of monetary policy to stimulate, we've just put our foot on the gas even further. The whole world has.
So there you are, guys. That was the latest updates to the Berkshire Hathaway portfolio, including a very interesting interview. When it comes to the best time to buy stocks, Warren doesn't really look at the short-term fluctuations or trying to time the market perfectly. He always has a long-term view. When it came to the pandemic, he said that businesses are always coming to him anyway with tariff worries or competitor worries, so this actually wasn't that much different. And then with negative interest rates, he said that all the people that he studied in the past, all the greats like Adam Smith, who is known to be the father of capitalism, had never mentioned anything about negative interest rates. So basically, we are all in uncharted territory. And he said only in hindsight will we all know exactly what the right thing was to do. Okay, so just one favor to ask. If you did find anything in this video useful, be sure to drop a like. That would be much appreciated, as every like does help. If you haven't yet subscribed, be sure to click the subscribe button and join us. I do have some great videos coming up that you don't want to miss. If you've still got any questions or comments, just post them below. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.